Hi everyone, myself C. Ishwar. I come up with episode 3 today, and we are going to talk about 7 interesting topics at 7 p.m. And the topic covers 7 interesting news, as title said, under the podcast. Importance. We are, for people who are into industry, people who are into business schools, people who are into studies, people across India, whoever wants to listen about finance, taxation, economy, and various global fiscal policies, budget, and many more things which we talk about in the podcast. And going forward, also we'll be having one-to-one podcast topics with expertise and economy, finance, various professionals across the globe. So, keeping this short note, I would be coming with 7 interesting topics now. The first topic today at 7 is China's real estate booming fiscal policies. Why we are talking about China? So, with the recent trend, we are seeing that emergence of China plus one strategy and the China plus one investments, where we are looking more on Indians on the South Asia side. But coming to the what's happening in the China, that China is government is boosting their real estate through their fiscal policies, and when they develop fiscal policies, what happens is that the objective of policy is to do some activity in the economy. So the activity of the economy, which obviously real estate in the sense means it's a demand creation. So when there is an activity like policy, like global capability centers policy, where we are developing in India, and every state is doing good in attracting the talent of this not talent, I can say, attracting the companies into India. So through the policies, so the importance of policy is to do some activity in the economy. Similar way, keeping this short note. What the China government is doing, they are developing fiscal policies for real estate booming, where we are seeing their, the China economy is, growing at, modest rate as compared to, India and other emerging countries. So, keeping these things, they are, like China regulators pledged to boost efforts to stabilize the housing and equity markets, and also they are conducting more effective fiscal policies. So that the objective is itself increasing the demand and to control the supply of land of new development. So when there is an curtailing the things, obviously when we stop the supply parameters to the stagnant for one certain period, automatically the demand will boost. So the demand contributors will be many, but in the economy, when we see the when the emerging countries like India, China, and Brazil, Germany, and few countries, real estate is the key factor, where when they control the real estate market, many things will move. So that is the objective that China is planning to boost their things on the fiscal policies front in terms of real estate. And ultimate goal is for them to lifting this consumption vigorous thing which were happening across the China. So that is one aspect where we noted down that China government is really trying push the fiscal policies on real estate. So through which they want to create macroeconomic demand entire China, which gives larger investment from the people of the China as well as the countries outside, where they pump the money and economy will run in a faster way. So this is a little bit thing where we talked about China's government push in real estate economy. And coming to our second episode at 7, we talk about Airbus has acquired 6.5 lakh square feet place in Bangalore for its global capability center action plan. So we I think in the previous episodes also, we had a very detailed discussion on global capability centers. Like what is GCC in one word is that where this knowledge hub of the economy be at the knowledge hub, we can say it. When knowledge hub is in one country, the country source country of this GCC will give many factors in terms of sharing of knowledge to various their subsidiaries, group companies, and many other countries. So that's about global capability centers, demand where they recruit skilled people. I also talked about this sector is can downward sector where the investment or government support is very nominal. So in this context, to link with the GCC's thing in India emerging. So Airbus, which is in aerospace and defense industry, has picked up around 6.5 lakh square feet office space in commercial tower in Bengalore's Whitefield. So I think the term is 10 years, where when we see 6.5 lakh square feet, obviously the impact which they create in the economy, like particular state in India, will be vast. So that also one thing where we need to note it down. And when it comes to big picture, like what is happening is that when we say India is the world's fastest growing in civil aviation market and airline, when we say airlines such as Indigo and Air India, so both, like the biggest airlines in India, ordered around more than 1,000 aircraft from Airbus. So keeping this upfront stage, so the movement of Airbus establishing GCCs, the GCC in Bangalore, is a critical thing, both for Airbus as well as the aviation industry in India. So that's a thought about, like linking GCCs, attracting these global MNC companies by giving the required infrastructure, government support, and also tying up with them for longer supply chain. Considering the very big sectors like aviation, manufacturing, tech savvy, and artificial intelligence, cloud computing, big data, and many things. So these all MNCs who are into the pyramid, top of the pyramid. When government is trying to enter some MOUs for getting the product or service, we also ask them to come to India and do something. So that gives a very cost effective and longer employment generation capacity. So that the second topic where we discussed that Airbus, which is an was I can say also this aerospace and defense industry maker is penetrating into India as through their GCC's model. So that's about second episode where we talk about Airbus is planning to establish their GCCs in Karnataka with 6.5 lakh square feet space. So and moving to the third topic at 7 at 7, where we talk about funding or acquisition of the startups space, where we see TeamSec leads around $210 million, like around 1,782 crores approximately, in Mumbai-based Rebel Foods. I think when we heard about Rebel Foods, we also heard about various their cloud kitchen or cloud food supply chains like Fasus, Behruz Biryani, and various other cloud kitchen brands. So the news is that there is a vibrant economy. I think we can see that funding things like from investors are moving into startup economy. And with this aspect, TeamSec had led around 1,700 crore INR in Rebel Foods wing, where they have different cloud kitchen brands. So when we talk about cloud kitchen, right, what it is cloud kitchen? So we know many things about these food aggregators like Swiggy, Zomato, and many more companies. where they operate, aggregators model where they tie up with restaurants and they deliver foods to the customers. So this way where we see this entire food supply chain. It's how we can say it, startups in the food sector. So now when we talk about cloud kitchen, what itself cloud kitchen? So I will tell you how it works. So the term itself cloud kitchen, right? When apparently you can't see, there would be dining space or cave or any facility for the customers come in and sitting it, but they work like this. They only to supply or their especially these food items through these aggregators like Swiggy, Zomato, or Uber Eats, and so many. So the and model of cloud kitchen is that they don't be any having any dining facility and entire supply through this online aggregator platforms. That's itself the cloud kitchen, where we know whether there are many factors where we see for acquisition of or funding into this kind of cloud kitchen models. Where we can see gross margin ratio or net profit margin ratio, or we can see LVC, long term customer cost or long term customer acquisition. So there are different factors where we can value these food sector companies. I mean, like cloud kitchen brands. So I think when we analyze this D team sec, this funding into Rebel Foods, we will get deeper insights. So that's about team sec, investment in Rebel Foods. Coming to the one aspect which I read about is that Team Sec has made an investment into Rebel Foods through primary and secondary deal. So primary deal where we know, right, where company directly allot shares to the uh, like investors. Then investor will be part of the shareholders of the company. And there is another kind of model where we see is secondary sale, where we heard about a lot of companies nowadays going for secondary funding. So in that means secondary funding doesn't get funds into the company coffers. So obviously it is an shareholder to shareholder. So company bank account nothing will hit. So what happens, like if you see the recent secondary funding deals in Lenskart, Physics Wala, Purple, and various health card farms also, we had seen that the emergence of secondary funding is also evolving. So a lot of when there is a secondary funding, a lot of existing investors will will exit. So that is also one key area, along with employees also, in case ESOPs are part of cap table. So the recent news where we are seeing that that of secondary sale transactions is also emerging. I think we can definitely see the vibrant economy of funding which was there pre-COVID times maybe coming slowly. I think I hope 2025 will be the average funding size for every month. Obviously, I think we can see that it crosses more than 500 billion. So I think the changes, things are moving, and the startup economy is moving, IPOs is moving. So a lot of secondary sales are happening. So the FPIs are coming back. Then ODI is increasing. Then FDI is also coming into India. So I think the middle income company, like countries like India and China or Brazil or Germany, this where we are seeing a lot of MSMEs concentration. I think in the coming episode also we talk about, so now IPOs by MSMEs also penetrating into the market, and through which this SEBI also brought out some regulations in the IPO for MSMEs part, that also we talk about. But the news is that secondary sale we are seeing a lot, and which gives ample scope for the investors, for the existing investors, where they join the company through seed or angel or series A, where they can get a chance along with existing employees, where they hold the ESOPs also will get benefited. So that's about team sec investment in Rebel Foods. Coming to the fourth episode at 7 I talk about Zomato got notice from GST department worth of 803 crores INR. So this includes a demand of 400 crores by of penalty and interest. And the crux of the thing is that why Zomato got served this notice is that tax applicability is this issue pertains to tax applicability on delivery fee, which collected by these aggregators like Zomato and Swiggy. So I think their contention is that the main issue is on the delivery fee. So when we order any food using this aggregators, platform or app, where I think we all can see the delivery fee, the charges. So where we supposed to pay for the service we are undertaking from the aggregators. So the contention is that the delivery fee, which is levying by these aggregators on the customers, is liable to GST or not. So I think when we say that whether a particular transaction is GST is applicable or not, we have to go and see the supply definition under GST. So the supply involves the consideration, and there would be service provider and recipient. There is an actual transaction should be taken place, and so there are certain factors where we say supply for the particular transaction is called as a supply or not. Accordingly, GST implications will be applicable. So, keeping this context, when we study this aggregators model, where Zomato or I think when you take anything like Book My Show or any aggregators where they charge service fee, the nomenclature when whether they use delivery fee, service fee, a transaction fee, which involves I'm saying like which involves the supply, then obviously it is liable to GST. But the argument from Zomato is that these aggregators is that they're collecting this fee, service fee, but ultimately they're passing to the this gig workers. So where this delivery boys or these gig workers where they supply the food, the actual delivery happens where they're passing it. So obviously their logic is that when they're collecting it and passing it to the delivery boys or these gig workers, the under there would be no tax. So this the contention by the Zomato as well as this GST department is somewhat we can say it can be analyzed in deeper, and maybe it can more and more the authorities. I think people can go for authority advance ruling where the company itself can go and take the opinion, or I think if the matter is in appeal stage, definitely we get an definitely we get a clear opinion from appellate tribunals. But the matter is that whenever I think from my perception, whenever there is an service, whether it is happening at the forefront stage, I know the cost is secondary thing. But I am giving some kind of portal or app, and which I say I am charging some fee. I know obviously it is a service I am offering to the some third party. So I believe that is the main contention of me, right? Like why I developed the portal, why I'm giving to users to access the portal, and using that access the portal if someone is taking some activity. But I think usage of portal, I believe, like the main commodity wherever it is happening, like the restaurant where they give serve bill to the party. I believe that's an direct supply where it involves GST, but the service charges which aggregators or anyone raises it. My perception is that it is liable to GST, whether the concerned thing like a collected amount whether it goes to the restaurants or delivery boys or gig workers, whomever it is. So that is the my view on this aspect. But I see GST Council will throw some light on this. Let us wait and see. And the that is about fourth episode at 787. Coming to the fifth episode at 787, where Asian Development Bank, the biggest bank in the world, approved around $789 million loan for Amravati city, which is an capital city of New Andhra Pradesh. So after state bifurcation, where we heard about that Andhra Pradesh and Telangana is bifurcated into two states. So the successor state, like the Andhra Pradesh, where they started entire activities into the new, and the entire infra they're building, entire data centers they're coming, and I think so more and more things are evolving. I think as we are situated in Vijayawada, I can see the economy is vibrating, and more and more, we heard that communities are coming, establishing their data centers, and the city like Vizag, which is a vibrant city. It's a there are a lot of tech service or entire manufacturing hubs were there, and the central government is also taking is an very highly very highly kind of smart city models, which is Vizag is selected, and keeping this entire trucks that Amravati city like which operates Amravati Capital Region Development Board. I got around 6,600 crores as is a development of infrastructure as well as generating jobs, and enhancing economic prospects, and I think many things keeping into this thing. ADB has granted 6,600 crores, and there is a one more where we are seeing that that ADB is also looking into the states where emerging countries like India, the growth story is very different, and the prospects are very different. I think the news which I read, this World Bank portal, is that entire world, the GDP for 2023-24 growth rate is at, I think, which is at around 3%, and the next forecasted for the next 3 years is also stood at 3%. But surprisingly, when we bifurcate and come down in deeper and look into the AP, like South, I can say Southeast Asia, which includes India majorly, our growth GDP, growed at 6.7% to 7% for the last 23-24. And the interesting thing is that entire world is moving at 3%, but India's growth story, like a South Asia countries' growth story, is very different, and the projections from World Bank is that in the next 3 years they grow at 7%. So even the entire world is growing at 3%, but South Asia is going to some 6 to 7%, which is double of entire world how it is growing. So this is a positive outlook. It's a forward outlook, and it's an inclusive development, we can say, and this is a widening of the countries as it is going and going. But this South Asia countries where through people or policies are many things, considering many things, inclusive policies, what they have, the growth is very stagnant, and 7% is growing at a next 3 years is non-imaginable, but it is very very good thing for the country and for the entire world. So keeping that constraint, I think the banks like ADB, like World Bank, and many other companies, global banks looking to invest more into this kind of economies where the economy is green, their debt to GDP ratio is very less as compared to developed countries. The inflation is moderate, and there are very factors coming to the key skill employees as well. So that is a one aspect where we can touch. So that's about fifth news in 787, where we talked about ADB approved $789 million to Amravati city, which is in capital city of Andhra Pradesh. Coming to the sixth episode at 7 at 7, where we talk about MCA slashes penalty on iPhone maker Vishran. I think I just want to give it some thought about why penalty is levied by MCA on Vishran, which we can say that this is the acquisition made by Tata Electronics in late 2023, and the entire violation is under Section 203 of Companies Act, where the provisions dealt with appointment of key personnel. The term key personnel includes managing director, full-time director, executive director, or company secretary, or other key management persons, where the need of the personnel is very important for a listed company or public company where paid up share capital is more than 10 CR. The mandatory thing is that they have to appoint key MPs, and the thing is that where we noted from the report is that Vishran Infocom Manufacturing, which is acquired by Tata Electronics in late 2023, has delayed in appointing a company secretary, which which uh, resulted in a violation of uh, Companies Act, resulting penalty levied on this division. So, Section 203 of Companies Act, where we need to remember, gives extract provisions about appointing key personnel. That's about 6 at 7, and when we talk about 7 at 7, the last episode where we are seeing as tightening the SME IP rules by SEBI. And to read this context, the board of the capital market regulator approved a proposal to limit the offer for sale by promoters in SMEs to 20% of entire issue. And also they said the regulation said that they cannot sell more than 50% of their holding in IPO. So that is a one update from SMEs where SEBI has listed out. And the second thing is that the smaller firms would be eligible for an IPO only if they have been operating profits of more than 1 crore from operations for any out of 2 out of the last 3 financial year, remitting the preceding the year in which the application that the company is making. So they then also given the criteria that if the SMEs wants to participate IPO, they should be there in the 3 entire financial years from minimum. Out of 3 financial year, at least 2 financial years, they would be having operating profit of more than once year. So that is one thing. And SMEs, they also given restrictions about SMEs would also not be allowed where objects of the issue consist of repayment of loan from promoter or promoter group from the issue proceeds. So, and the sums means once they raise the funds, they can't say that they'll pay the loan to the promoters of existing, promoters. Where if they can, do something like that, SME is also not allowed to, get the funds from IPO. So, I think, one more thing is that public offers in public regulator has also proposed to cap the amount for general corporate purposes in SME public listings at 15% of that amount authorized or 10 CR, whichever is lower. So I think general corporate purposes, wherever a company is listed, which is say that they are using for general corporate purposes, the cap for total amount which they are going to define in the prospectus should be 15% of the total amount. I think the awake of these rules, came into instances where we are seeing diversion of issue proceeds to sell companies controlled by promoters and inflation of revenue by circular transaction through related parties. So this entire games, these gaps we are seeing. So that is the reason IPO in SME sector, which SEBI has bought out many regulations which starts with operating revenue, and there is an capital there's a limits fixed for certain transactions which SMEs are going to rise, and post rising also there are some restrictions, and also the SMEs SME IPOs regulation changes by SEBI involves category 1 merchant bankers, where who what, and the category when bankers can be applicable and permitted doing this SME IPOs. And I think the news is data point is that around 224 merchant bankers are registered with SBI as SEBI as on July 31st, 24. So there are given certain criteria that who can act as a category 1 merchant bankers for SEBI SMEs IPOs. So there is some tightening rules which we are seeing from SEBI, and that is 7 at 7 where we talk about tightening the SME IP rules by SEBI. That's about 7 at 7. And this is the topic where we are discussing consist of China's real estate boosting through fiscal policies, And also we talked about Airbus is into acquisition of space for establishing their global capability center, and we also talked about TeamSec is planning to TeamSec led around 1700 INR rupees in Rebel Foods, and also we talked about Zomato delivery fee liability into the purview of supply definition or not, and also we talked about capital city of AP, Amravati city capital region has got 6,600 crores of INR from Asian Development Bank, and we talked about SEBI tightening IPO rules, and also we talked about MCA slashing penalty on Western Infocom, for violating Section 203 of companies. That's about today's episode, where we talked about seven interesting topics, and I hope I'll come up with another interesting topics in the next episode. So keeping this show very detailed. Short note, I hope someone gets something to understand from this podcast and use useful for daily works. That's about today's episode. Thank you, everyone. Bye bye.